My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multimillionaire. This is my trading game plan. Hey guys, welcome to this Friday edition of My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. The reversal heard round the world. Nvidia yesterday gapping up on earnings, closing sharply lower. The stock market on the NASDAQ up over 2%, closing down over 2%, and almost 5% stock market reversal. Now, again, if you've been following here, you know this is exactly what I've been leading you to understand is the likely outcome, the high probability outcome. We're going to get right into the charts here and discuss this and look at opportunities, because from panic and fear come great opportunities. Some of the biggest money-making opportunities out there can be found when panic hits Wall Street. All right, let's take a look. Number one, the ES futures, the S&P futures are trading slightly higher today. This was yesterday, so we started higher on the day. You can see again the price action. The markets were climbing, and then the bottom fell out. Now, the culprit here is a couple things. Number one, Jensen Huang is the CEO of Nvidia, right? And every time he comes out, he just tells us how amazing it is. There's not really a lot of specifics, maybe a backlog, but we know that these backlogs are kind of a figment of the imagination. Like if everything goes perfectly and all of these companies spend their maximum, then our backlog is X, Y, and Z. Again, markets are becoming more skeptical of this. We've talked about the issues within the semis and the AI trade, data centers being halted, depreciation being spread over 7 years on a chip that depreciates in 2 to 3 years to zero, basically. All of these factors plus the money rotation are all concerns. Then you throw in the charts like we've been talking about, and this table was set for the drop that we are seeing. NASDAQ now down nearly 7% from its all-time highs. All right. So again, futures early this morning were down a little bit, but we have recovered. This on the back of a few Fed officials talking slightly more dovishly, potentially giving an avenue for still a rate cut in December. But I want to be clear, the odds still are slightly less than 50%. So again, markets are reaching here. Now, also, we have buy the dippers, right? And one of the biggest factors, this one right here. Remember yesterday and the day before, I talked about this black swan risk of the Japanese 10-year that kept on surging up, and up. Well, it did pull back in the overnight, and that is a positive. That might be a small reprieve for the overall market that is getting very worried about the amount of debt that basic countries have, but also individual companies, especially in the hyperscaler AI division. All right, so the 10-year yield pulling back again today. You can see that is good news for the overall markets. Flipping over now to the SPX weekly chart, guys. Take a look right here at what we have. Look at the drop here. So this is the S&P down 5.5% going into today, but this is the chart that, again, has predicted. It wasn't me. It was this chart. I want to be clear on that. I have no abilities whatsoever if you take the charts away from me. All right. So we can see again the parallel channel. We had the gap up yesterday. You can see it right here on the NASDAQ 100 daily chart. The gap up yesterday. We talked yesterday about how stocks don't go straight down. We confirmed, we bounced up, and then it resumed its downward trek on the QQQ. Amazing how once the parallel channel broke on the Qs and confirmed, yeah, you get gap ups, but this is now epic resistance right here, and price got rejected. And then, of course, we have to just touch base with this chart here. This is, again, another chart heard around the world when I discovered that the max move on the SMH, the semiconductor ETF, is a maximum apparently of 102% above the weekly 200 moving average. It caused a 45% drop in 2021 in the semis, a 40% drop in 2024 and 2025. And here we are again, starting our trek back down. Now, like I said, this is a lot of negative stuff, but from negativity is opportunity. And we have to remember that. And some stocks are getting slammed. What have I been doing the last day or so? I've been accumulating some micro strategy. And you might say, well, Bitcoin's getting crushed. Absolutely it is, which is another reason why I like the Bitcoin bounce here. Now, listen, overall, do I still think Bitcoin's going to 73 to 75,000? Yes, but there's opportunities. I mean, this is what swing traders live for, is this volatility in the market. So let's take a look here, guys. MicroStrategies, look at this epic level of support right down here. Now, in panic, could we go a little bit lower? Sure, but ultimately there should be a ton of support between basically around 175 on MicroStrategy. Pre-market is trading around 172.20 as Bitcoin got as low as near 80,000 today, folks. Holy cow, what a drop. We'll look at the Bitcoin play and also Ethereum, which did tag major support today as well. The dollar continues to be pretty muted. We continue to hammer on the underbelly of resistance right here. Again, resistance you can see on the DXY going all the way back to 2022 when it was support here, and now it's becoming resistance. We can see again here, here, and here, resistance. All right, so keep an eye on the US dollar. The 10-year yield trying to break this cup and handle pattern to the downside. If it does break, you could revisit your lows around 3.93. What's kind of crazy here is that if the stock market continues to sell off, the odds of a Fed rate cut will go up. That means if the market sells off, rates should likely come down, which is what we're seeing here in the 10-year yield chart. And the idea is very simple. If you ask me what has been the most highest contributing factors to inflation, part of it is tariffs. That's more of a one-time kind of maybe a couple thing type moves in inflation. And then it's the stock market. All right. When you have a stock market that just keeps making new all-time highs, people that are heavily invested, they just start consuming and buying more. The supply demand side, if you have more buyers, price goes up. Once you bring the stock market down and the consumer all across the spectrum stalls out, then prices can start coming back in. So again, higher chance of a rate cut if we see, again, the stock market falling further. All right, let's look at NVIDIA again, guys. Epic reversal yesterday, gapped up and came all the way back in. Now, NVIDIA did hold key technical support here. Look at this little area right here. You almost have this little pseudo head and shoulders pattern, right? Like right here and then right over to here. So again, just interesting to follow the neckline of this. Now, if we calculate out the target, where would NVIDIA go, assuming this is a head and shoulders that will break? We can do a measured move from the high of the chart on NVIDIA to the neckline, and then wherever we break, that's your measured move. Now, what's amazing about this, right? Check this out, guys. I've been talking about a move back to about $150 on NVIDIA. Why? Because that's essentially the range that was the previous all-time high before this latest breakout. Charts tend to want to recapture their former, or at least touch their former high pivots. And if we look at this, right, here's your zone, and look at where the target on NVIDIA is. It's smack right in the middle of that target zone. All right. And again, notice where I'm getting that from. Charts again, and let me draw this in because I think it's really, really important, right? When you have a trend area here, right, and you come up like this, and you come into this, and then you get rejected, then it breaks out. Oftentimes, you'll see it come back to that level before it can go back up. It's what I like to call a retrace into the scene of the crime. All right. So again, just something to look and see on that front. Now, again, a few other charts that are on my radar to trade today. We have SanDisk falling over 20% yesterday. Okay. So again, 20% drop on that. All right. So again, now where is my buyable level? It is bouncing a little bit today, folks. And again, we see that on a downward move, we're looking at support around 167 right here. This should be a major support on SanDisk. Couple other charts. We looked at Micron. Look at the parallel that broke down on Micron. I'm eyeing today major support around 192. If it flushes to 192, there should be a bounceable level there on Micron. Robinhood's on my buy list. Again, short-term only. Please understand, guys, this is really important. Short-term only are these plays, meaning that ultimately the markets are going lower, but there will be quick bounces over a day or two or a week or even just intraday at some of these levels. One of the levels, even though I'm net longer-term bearish on Robinhood, This level here at 100.85, look at the gap right here. We closed and then opened up here and had this big bull move. Same thing, retrace to kind of the gap fill, aka scene of the crime. That should be technical support on Robinhood. All right. So again, we'll keep an eye on these trades. Now, there's a ton others that I'm keeping an eye on. If we look at Rigetti, so Rigetti's on my radar as well. There's a gap fill coming up around 21.95 right here. And then additional major support around 18 bucks. So the accumulation zone here is anywhere in here for an eventual bounce. And the beautiful thing about this is, let's say you have an average price of 20 bucks on this thing. As it hits here, you add a little bit, and then down here, you add a little bit more, and your average is, let's say, 20 bucks. Well, if it bounces back to 30, which is only here, right, that is a 50% move in your investment. That's incredible, folks. That's an incredible opportunity. And again, it's not to say that Rigetti is not eventually going to 15 or $10. To be honest, I have no clue how low it could go, depending on how much the de-risking in the markets go. But what I do know is that ultimately bounces occur, and opportunities, when things fall the hardest, they ultimately bounce the hardest. And when things pop the highest, they pull back the hardest, aka SanDisk, right? I mean, SanDisk is a great example of this on the charts. If we bring that chart up again, I mean, this vertical move, let me go to the weekly chart. I mean, look at this weekly chart. So weekly charts that are vertical like this, they have the hardest pullbacks, all right? And when they get the hardest pullbacks, then they'll get the heavy, heavy bounce. And eventually volatility kind of gets sucked out. Think of a market like this, right? You have a pendulum. Okay, here's my pathetic drawing of a pendulum. Let me do that a little bit better here, right there. And it swings one way, and then it swings the other. So you have overbought over here, oversold over here, and it swings back and forth and back and forth. But each move is a little bit less, right? Each move less and less. And so what we're trying to do as traders, we want to capture the high of the move on the short side, then the big bounce, and then again, it kind of gets less and less and less on the charts. And that's a great example there to understand. Think of a market. And basically, when you're talking about a pendulum swinging, it's fear and greed. So greed is the height when you get to max greed, like in this market recently, right? Where people kept telling me the markets can never go down. They can never go down. The AI trade is here. People are underestimating. I mean, even analysts on TV yesterday, they were upgrading NVIDIA to $325, $350 per share. 12-year price target puts it basically at what, $7-8 billion market cap. I mean, are you kidding me? These analysts that are supposed to be intelligent are giving these upgrades. And listen, I'm not saying NVIDIA eventually can't get there. But looking at that chart, looking at the economy, looking at the factors, you're really going to tell me upgrading it basically for another 50, 75% move? I call BS on that right there and then, folks. And this is why the charts are absolutely king. All right. And again, just going back to this chart of the SMH. All right. That was pure data, no BS. Speaking of which, you guys know my favorite thing to say is no BS, just charts. And that's what we focus on, charts and data. Monday is Green Monday. Not only are we discounting a ton of our courses, like 50% off, but I'm going to be trading live. The morning session, I'll be trading live in studio. You'll see my live account. You'll see what I'm trading. All of that is right there. Join me on Monday, guys. It is going to be an epic day of analysis and live trading, basically all morning long, maybe even into the afternoon a little bit. All right. So I just wanted to mention that. Okay. We got to get into crypto here, guys. Crypto, wow, what a drop on Bitcoin. Look at the fall on Bitcoin here. Let's get rid of the 200 MA there. Bitcoin bottoming out near 80,000 today, got below 81. What has been my longer term target? Right here. It's not far away. Listen, when we were above 100, I said, guys, we're going to 93. And if we break 93, we probably go to 75. People said it's never going below 100 today. I heard that and I said, oh, baby, it's definitely going below 100. And part of that, by the way, it's not to make fun of anyone. It's to understand that human emotion and the herd mentality oftentimes triggers tops. And so what I do is, and I want you guys to do this as avid watchers of my trading game plan, is start to pick up when everyone is screaming from the rooftop that something can't happen. The markets have this uncanny way of making it happen. And I've learned to use that as an extra indicator. I want you guys to use it as an extra indicator, right? Pay attention to that, become more aware. In any case, listen, I actually think Bitcoin is into some short-term support, and we likely could bounce. See this area right in here, right? Right from here down to this area. It is oversold in the near term. In 4 weeks, we're down from 115,000 to basically 80,000. This is one of the biggest drops in this amount of time in Bitcoin since 2022. Okay. Now, again, what I'm thinking is this: we're going to likely get a bounce up, maybe back to 90, maybe even back to 100. And then I think we head back down to about 73 to 75. This will be that big zone of support where, again, will it break that? I don't know. Not going to pretend to be able to tell you, but this will be the battle zone. This will be the battle royale between bulls and bears at this level. All right. So near term, I'm looking for a bounce on Bitcoin. As I said, I'm in MicroStrategies. If I thought Bitcoin was going straight to 73 to 75, I wouldn't go long MicroStrategies, right? I mean, think about that. And by the way, I could be wrong. I've been wrong before. I'll be wrong again. I'm just following the higher probability scenario, which dictates a likely bounce here before an eventual flush into 73 to 75,000. All right, we got to take a look at ETH, guys. And again, I have done some buying. I've been nibbling on ETH. I want to show you this daily chart. Look at this zone right here on ETH. We've talked about this right in here. There should be some sort of good support zone on ETH in this vicinity. All right. I nibbled on some Cardano today. Now, some of you guys might say, well, I don't care about crypto. I totally respect that. But remember, the chart analysis is universal. So even if it's something you don't care about, learn from the charts. Don't be closed off. Just because you don't trade something doesn't mean you don't want to learn from it. Learning is the recipe for success. No doubt about that. But look at this level on Cardano down here. So I did nibble today, guys, on Cardano with Smart Money Crypto members. I've even picked up a little SUI, just continuing to nibble. And again, nibbling being a technical term, maybe not a technical term, but it's the idea of dipping a little bit of money into the realm, knowing that it could go lower, but you start to dollar cost average slowly for a swing trade significant bounce. So again, keep that on your radar there. All right. And again, you can see Cardano right into that level there. Look at this drop from about 60 cents to 40 cents, 33% move down. And that's not even taking into account where it was trading just back in August when it was $1 stock. Think about that, 60% down from just August on Cardano. And really, again, crypto and altcoins have been absolutely crushed. I mean, Avalanche here, it hasn't hit my buy level yet. You can see it broke support, but this is my buy level here. But I'll be waiting patiently. If it wants to come down there, I'll nibble on that one too. I have I'm not anti anything. I'll go long everything and I'll go short everything because I have no emotional attachment. The second you have emotion, it's going to skew your judgment and make you do something you shouldn't do or make you hold on to something when you should dump it, vice versa. So again, be agnostic. You don't care about what it is you're trading. Imagine you erase the symbol, erase what it is, and all you're looking at as a chart is a chart, right? And what is that chart saying? Is it a long, a short, or a neutral? A neutral means a no touch, right? That there's no trade there at all. And charts, honestly, mostly are no touches until they hit key levels. Okay, gold. Gold trying to break technical wedge pattern support. Earlier today, it was below, and it's so far rallied back above. So gold is hanging on here. If we're going to see the bigger move down on gold, we have to break this trend line right here. That is part of the lower end of the wedge pattern. If you're looking for all-time highs, you got to break this upper trend line, right? Right around 4,200. So you got support needs to be broken around 4,050 and resistance around 4,200. Those are your 2 points. And at some point in the next week or two, we're gonna break one way, right? Because this is getting to be a point by December 4th, basically in 2 weeks, we will be at the head, which means by December 4th, this chart is going to have to make up its mind which way it wants to go. Silver attacking its support line here. Beautiful double top right at the high of that parallel. We can see the parallel right here, the beautiful pivot top that, again, I alerted to. Now we're watching to see, does it break here? If it breaks, it's going to go test 45.60 again, this low. And ultimately, I still think 43, maybe as low as 40, could be in the cards for silver. I know that sounds crazy, but use it as a buying opportunity. You know, people, and then I'll just comment on that real quick. People are so like, they're like, oh my goodness, you know, how dare you say it go down to these levels? I kind of want it to, right? I mean, if you have money on the sidelines and you've been kind of not going all in, which is what investors shouldn't do. We should never go all in on anything. Pullbacks in bull moves are great buying opportunities. I mean, just fantastic buying opportunities. The only people that ever are like panicked about something pulling back are people that they over leverage themselves, which honestly I used to do when I was a new trader. I used to always over leverage myself because I was trying to make $1 million overnight. And when you try to make $1 million overnight, you know what the market does to you? It punishes you and takes your money. Did it to me many times over. Can't even count how many times I tried that early in my career. It's one of the reasons I had to work 3 side jobs just to replenish my trading account when I was at a prop firm where they gave me extra money to trade because I just kept losing money. And it was like, I was not going to give up on this dream to become an expert trader, to learn technical analysis, to be profitable in the market. And I'll tell you one thing, if I can do it, anyone can do it. All right. My IQ is standard. My SAT scores were average at best. I just worked really hard. I had a never give up attitude. Remember that, folks. Anything is yours for the taking if you try hard enough. All right. Here we have oil. It continues to be in this consolidation phase right here. Once again, it keeps getting rejected at the cup and handle resistance line. Here's your support. It just tagged support again. Remember, any move below the low of the cup would negate that cup and handle bullish pattern. Technically, this is still a bullish pattern, but again, just be aware, any violation of the low of around 55.90 or so, and that pattern is negated. Quickly going on to natural gas before I have to jump into my trading room. Nat gas is up a little bit today. It's still due for one more push to get into this resistance zone. And once it's in there, again, I will start to contemplate a short trade on natural gas. Obviously, if you're in my smart money commodity service, you'll get those in there. I trade, by the way, in commodities. I trade ETFs and stocks related to commodities. And then Drew Wolfer, who's our expert in commodities, he trades the futures on these different commodities. So it doesn't matter what you want to trade, but smart money commodities is a fantastic place for that. All right, guys, I have to get going. But listen, Green Monday, be there or be square. Let's make some money on Green Monday. I'll be trading live with the rest of the crew, and I look forward to having you watch in and tune in. Remember, game plan will be normal, and then we'll go right into the trading for the morning session right here live on verifiedinvesting.com. You can come, you can ask. I think you can ask questions, although I don't know for sure. Either way, be there. Let's make some money on Monday. Have a great one, guys. I'll be back for the weekly wrap up later today. Take care.